Welcome to the Unlocking Wealth podcast. Thanks for joining us. We will motivate and inspire you as we share strategies from successful and wealthy individuals. Here is your host, David Ordonez, an entrepreneur and real estate investor.
Welcome to the Unlocking Wealth podcast. And I'm very excited today because in this episode I have Saurabh Shah. He's the co-founder of Instalend, a real estate lending company. And we're gonna dive in and talk with Saurabh about his venture, his business. Saurabh was born in Mumbai, India. He came to the United States in 2008 to get his master's on financial engineering from NYU. And he spent a few years working on investment banking, real estate, private equity, and debt funds before he started and launched his company with his brother, Instalend. So thank you, Saurabh, for being here, for participating in this podcast. We're very excited. So thank you.
Thank you, David. It's a pleasure to be here.
Awesome, man. Well, let's just dive into your story. You know, we love to talk about successful stories and unlocking wealth strategies, especially people that come from different countries, like I did, like you did, coming from a different country to the United States, and you know, being successful here. So tell us a little bit about your story. You're from India originally, so tell us a little bit about you.
Yeah, it's a story that most aspiring immigrants follow. You know, I was born and raised in Mumbai in India. I've done my primary school back home. I did my undergrad major in engineering and computer science. And I then moved over to the US to come to New York, aspiring to work in the financial world. And when you talk about the financial world, you want to be nowhere but New York, which is the financial capital of the world. So interestingly, I came in 2008 and my major was financial engineering. And the timing was just apt because 2008 is when we saw the subprime crisis. And I had an inclination to work in real estate. So I saw the world come down, brought down by subprime. I studied everything about CDOs, CMOs, collateralized packages. And that really spooked me, but at the same time, really got my interest to know as to what happened, what went wrong, where was the domino effect, where it all started from. So those were really interesting times. While I was doing academia, I was practically also seeing a lot of this unfold here in New York City. So that really, was my time to launch into the financial world. I started off my career working in investment banking. I spent a few years covering different sectors from technology to consumer retail. And I then moved into real estate, working with a private equity team and then into the debt funding space. My interest in real estate was primarily because it's one asset class, which is touch and feel, coming from different sectors like technology, where software is something which is a little more abstract. You see a code, but you can't really touch and feel it. And real estate also offers a set of its, different unique benefits. So that really got me interested in real estate. And, that's when we decided to launch our own company, which was primarily lending in real estate, which is what now we call Instalend.
That's great. And the way you guys structured Instalend was with a fund. You guys created a fund. You guys do crowdfunding, correct?
Right. So we started off with crowdfunding, and once the platform took off, and as we started hitting more scale, we also had to diversify the color of our capital. So we, of course, now have institutional investors. So it's a mixed bag. And we are looking forward to adding more colors of capital across different products and across different asset types.
That's amazing. How long ago did you found Instalend? I mean, how many years are you guys in the business already?
So it's been close to 4 years now.
Wow.
And we started off just between Sohin and I. It's been completely bootstrapped. So it was one day at a time, funding one loan, working in one location, to then expanding the scope of business to now become a nationwide lender.
How many loans are you approximately closing in a month now?
So I think it depends on the velocity, but typically we close between 45 to 60 loans a month.
Wow.
And as you know, the gestation period, right, from bringing in a loan when you originate to completing your underwriting, to finishing all your title work and then scheduling closing itself is a 30-day seasoning.
Correct. So you have a lot on the pipeline, obviously, coming,
Yeah.
and sometimes they delay more than others. But that's great. That's an amazing, story in terms of building your company. What did motivate you guys? You and Sohin say, you know what, this is it. We don't want to work for anybody else. We're gonna unlock the possibilities of wealth creation for ourselves, and we're gonna jump in and do this on our own. What was the trigger moment?
So we started investing in real estate as a side hustle, doing more of fix and flips, but working as passive investors. And we saw how the asset class performs. And at the same time, we realized that the asset class itself is a hedge to inflation. It is an asset class which has recourse in case things go wrong. You can go back and recoup your funds by, bringing the asset down and liquidating it. So for us, it was more of finding a sort of an investment instrument which had its sorts, had a sort of return, but also somewhere we could mitigate the element of risk. So that's really where we got started investing in real estate, and then morphed over to then becoming, lenders who would finance such investors that we could relate with. Because when we started the journey, we realized that to scale the portfolio, you need somebody to tap into financing with. So that's basically how we got started.
What about, did you have any mentor, anybody that was mentoring you, showing you, teaching you some of the real estate, especially jumping from investing passively in real estate to actually creating a crowdfunding platform? And I mean, there's a lot of things in between, right? I mean,
that's a great question. And let me break it down this way. I would say my point of contact on my first deal, whether it was my real estate agent, it was my licensed contractor, or it was my closing attorney, or it was working with Sohin and structuring the deal, I would say all of those stakeholders were mentors, because the first time around when you're doing it, it's such a specialized sector that you need to have your GC bring the best scope of work to you. Sourcing of materials, the price points, making sure the project is completed on time. So these different things that, factor into your individual success. So if you're making your money on the buy, you want to make sure you have a right agent who's sourcing properties and bringing it to you at the right price point where you can put something under contract and lock in that fee. Yep. And at the same time, when you finish the work and you put the property back on the market to sell it, you want to make sure you're again working with with an agent who has the right reach, can close within a few days, can bring you the best offers. So all these different stakeholders in their own way played that significant role, where I would say for us, they were nothing less than mentors.
What about the mindset? What do you think? I mean, I don't know, when you grew up in India, how was your mindset? I mean, you always saw yourself succeeding in the United States. I mean, how did you see yourself when you were growing up? I mean, was the mindset so important? Like I always think that 90% of the things happen first in our mind, and then the 10 other percent is just the mechanicals of it, right? But what do you think? I mean, how was it for you?
So for us, I mean, we come from a family which has a family business. So my parents have always been working a family business, and for Sohin and I, when we decided to move away from the family business to set something up by ourselves, the only thing we knew was that it had to be something that would challenge us, and it had to be something that we could bring from 0 to 1, 1 to 100. So scale was very important, and that entrepreneurial mindset sort of kind of came in because we saw that from our own parents growing up. So that really was the mindset always to do something by yourself and try and do something that has that opportunity to scale.
Now, specifically on the mortgage lending, right now, for our listeners, you have the traditional lender, which is the typical bank that you go and you ask for a mortgage. And then there is the non-traditional, which in this case where Instalend is, which 100% focusing with investors that are doing buy and hold rentals, multifamily projects, or obviously fix and flip. So tell us the main two differences or the main differences between both lenders, right? So people can understand why you guys are in the space and why is the benefits of working with you versus the traditional lender like Wells Fargo or something like that, right? Just break it down for us.
Sure. So for any investment, in the real estate financing world, you have two separate avenues of capital. One is your traditional financing, which is your banks, your credit unions, which primarily are paper driven. So if you're looking to buy a property, there'll be a full doc loan. What I mean by that is they'll underwrite you, your credit, your financials, your monthly income, how much you have in your retirement funds, your ability to pay the loan back. So the underwriting is more focused on you as compared to the asset. So it's very paper heavy, and the time to close typically would be a couple of months. Now, when you're looking at a good investment, especially in real estate, like I was saying, you usually make your money on the buy. So it's important to make sure you close on time, and good deals are not around for too long. So that's when you feel you need an avenue of a private pool of capital, which can be more asset specific. So the underwriting is more asset specific, and can come and close on time. So that's where Instalend comes in. We are an asset-based lender. We are a no-doc lender, so we don't spend a lot of time, asking you for your tax returns or your W-2s. We rather get an appraisal on the property done, underwrite the property. We do a credit and background check on you just to make sure there's no hair there. But outside of that, we give you an investment purpose loan, which is nothing less than a business loan, and we make the loan out to your LLC or some other business entity. And because we are no doc, it allows us to move really, really quick. So we typically close within 3 to 4 weeks from when we bring the loan in. So that, as an investor, allows you to close on that very attractive property which is on the market, but close it in a timely manner.
Correct. And for the listeners that don't know, there's a lot of properties out there that are off market, and you can get those properties. You can source these properties in different ways through wholesalers, or if you're doing it on your own through letters sending to motivated sellers and so on. And sometimes even you can find deals in the MLS too that are good deals. But like Saurabh was saying, it's very important that you can close quick, because those deals are going to go fast. There's going to be a lot of cash buyers too. And with Instalend, you can close really quick. And the loan, if it makes sense, if the property makes sense, obviously that's how you underwrite. It's not, like you said, it's perfectly put together. It's not about you, it's about the asset itself.
Right.
That needs to make sense. What do you think about regulation? Do you think the private money space will get more regulated? I mean, we saw the problems we had in 2008 on the traditional lender part, with all this non-regulation and all these loans that created the huge crisis in 2008. Now, obviously, from what I know, the traditional mortgage industry is very regulated. I heard that is even probably after the healthcare industry is the second most regulated industry, the mortgage. But what about private lending, right? Because private lending doesn't follow onto the same guidelines in a way. So yeah. What are your thoughts on that?
So it's interesting you make a reference to the 2008 crisis. That was primarily a housing crisis for home mortgages, which is your primary residence. What we're talking about right now as real estate investments, these are non-owner occupied properties. So these are investment loans only. So when you talk about investments, you talk about securitization, you talk about your debt to equity ratio, all of that. And what we've learned from 2008 is what we've really seen get applied to this specific form of investing, where, the real estate property prices have been appreciating. We've not seen lenders go out there and over leverage. We still want investors to have 25% equity when you're doing a cash out refi, or at least 10% down when you're doing a fix and flip. So there is enough equity cushion built in to make sure that if there's tomorrow a sort of a price correction or any sort of downfall, you still have enough equity cushion to absorb that and still recoup what your principal position is.
Correct. Okay. And it's key when, to see you as a partner on your business journey, let's say if you're doing flips or renovation projects, you really become a partner of the investor. You're not only seeking for the best interest of the money that you're lending and your interest, but also the interest of the investor, because your goal is not to own the property. You want to make sure that we succeed, and we can continue doing more business and more loans, right? I mean, that's really what it is. So I tell us, a lot of people ask me, how do you invest remotely, right? I live in Las Vegas and I own properties in Memphis and Florida, and how do you do it? I tell them that having a key lender partner is critical, because you keep the contractor accountable on every single draw that we do for the construction. And you really become kind of like you help us audit the construction on the deal. If we're just sending money to the contractor and nobody's really putting eyes on the project, we're at risk. And even sometimes like that, things happen, right? I mean, contractors don't meet their deadlines, contractors don't do their job, even though we're doing inspections and we're partnering with a good lender like you guys. But it's definitely a challenge. What do you think about remote investing? I mean, how do you feel about that?
I mean, it honestly, once you start scaling your portfolio, it's not possible to go physically to every single asset that you own. So you have to get comfortable with the fact that you're looking at numbers on a spreadsheet, but you have the right team in place. So like you mentioned, having the right lender as your partner is sort of a second set of eyes for the project, as in when you finish the rehab, to monitor the progress, disbursing your rehab draws. So I do think remote investing is something which is becoming more mainstream as investors are getting more access to real estate financing, and there are more opportunities out there. And most lenders today, are working with sort of procedures and protocol where, funds are released in draws, they're not advanced. So, you're always making sure there's enough equity in the project before you go ahead and release more debt financing. So your debt to equity ratios are always maintained. Your leverage position is always maintained. So all these nuances, or all these procedures rather, mitigate your risk. Which is something which is a good format, because once you can do that on one specific property, you just have to apply it to a bunch of different properties. So yeah.
Okay. Now, what do I'm active obviously in social media, and I participate in certain groups, and a lot of people always ask me, so is right now the best time to invest? Is right now the best time? Should we wait? Or and I always tell them the best time is now. Right? Don't wait, right? It is now. This is not about really what happens in the market. It's finding the property and making sure the numbers make sense. What are your thoughts on, there's so many people saying, no, yeah, prices are gonna start falling tremendously. We might see a tsunami. That was said right after the pandemic started. Oh, we're gonna see a flood of foreclosures and so on. Nothing has happened yet. Now, I have noticed that in certain markets, prices have, I wouldn't say corrected, but kind of like slowed down a little bit on the crazy trend that we saw in 2021. What do you think? What's your forecast of the market? And I know real estate cannot be seen as a whole in the country, right? I mean, it's a very local forecast. Each market is different. There's so many. It's over 400 sub-markets, I think, in the United States, metropolitan markets and sub-markets. So it's impossible to give a kind of like a one forecast for the whole country. But overall, what are your thoughts in terms of like maybe the biggest markets in the country?
Yeah, I mean, that's a great question, right? How do you time the market? Like you said, now is always the best time. And just going by some of the stats, if you look at real estate and affordable real estate, right, especially in the US, 2000 to 2006 was when we saw a peak in construction activity, which is when you saw maximum housing inventory come to the forefront to the market. Since then, it's the same number of units which are exchanging hands, which are being traded, bought and sold. So we've not really seen an uptick in more construction activity to put out more houses, which is why we still have a shortfall in the US housing inventory. Now, how do you solve for housing inventory? I mean, you can either go out there and do more single family homes, or you can start doing multifamily, where you're going more vertical having the same piece of land, but solve for housing for more than just one family or more than one person. So just drawing a trend analysis from there, if data has to tell you anything, it tells you that there is a real shortage in terms of number of housing units available. So while we may not continue to see the same level of escalation in underlying property values like you saw coming out of COVID, you may see a moderation in the appreciation, but there is no fundamental reason for housing to go down because there is still a demand supply gap. So we need to meet the demand, for which you need to churn out more supply.
Correct. It's an inventory situation here, and supply and demand is what determines the price. And obviously, we've seen inflation too, which is the other subject I wanted to touch. Is supply chain issues have caused the rise of prices in many materials, construction materials among some, and obviously that has created an impact on production costs for homes as well. So we've seen inflation. We really don't know the rate. I think is a lot higher than what they say. But I heard this concept the other day and I thought it was great. And we can talk about this. Inflation-induced debt destruction.
Can you say that again?
Inflation-induced debt destruction. And it was very interesting because right now with inflation is a great friend of investors, right? Because we're buying an asset and we're locking a loan with a lender at the current prices. But the debt for me is really in a way getting destroyed by inflation. Because in 10 years from now, I'm not going to owe the same. In nominal dollars, I will owe you the same, but really not because of inflation, right? What do you think about it? And I thought it was pretty cool.
I mean, it is something very deep to reflect on, and which is why I always encourage all my investors to do any sort of long-term loans which are fully amortizing. So in a way, you're paying back starting day one. So even if there's an underlying inflation and the value of dollar today versus the future cash flow is different, you have an opportunity to catch up and look at a smaller principal balance to pay back.
Correct. Yeah, and the beauty about real estate, just going back to real estate, and even though you agree or not, or you see a different in terms of inflation helping investors, and that's what I think right now is probably the best time to go into debt, but into the good debt, right? Into buying tangible assets, right? Because in a real estate asset class, you're not really paying for the mortgage. Your tenant is, right? The tenants are living in the property, are paying for the mortgage, and as long as it's cash flowing, the property, you're ahead, and it's in the same way, it's irrelevant if the price of the property goes up or down, as long as you're cash flowing, right? Yeah. So yeah, I think that's is very interesting. Now, what do you think in terms of the lending and crowdfunding, and there's so many new funds coming out? I mean, what do you see as in the marketplace, as we're seeing so many people coming into this space for you guys and for the real estate investors, because there's so many options out there for investors now?
Yeah, I mean, that clearly signals that real estate investing, especially for fix and flips, long-term rentals, is becoming more mainstream, and there is institutional capital which is coming to chase this yield, because the yield that you get on these investments it outperforms everything else from a fixed income investment perspective, and also gives you 100% collateralized security. So that attracts many investors to come into the market, and for the right reasons. And from our perspective, having more lenders come into the market, it only makes it more competitive. It only improves the entire process, because then you want to make sure that in some way you're more competitive. There are advantages that you can bring with your capital for your investors. So it's always good to not be the only guy doing it, because then you're wondering, are you the market fool? That you're the one doing it. So yeah, I welcome more investors coming in, more lenders coming in, and in a way, I think it's only good for the industry.
Yeah, no, I agree. hear a lot of people asking me, and I was saying that at the beginning, when is a good time to invest? Should we wait? Should we wait? And I'm like, as long as you find a good property that make numbers make sense, right now is the moment, right? Don't sit on the sidelines, and don't underestimate what a rental, 2 rentals, 3 rentals, 4 rentals, 5 rentals, or even a few fix and flip projects can do for you as you are trying to unlock this wealth for you and yourself. So I think the moment is now, and the benefits of real estate, not only talking about the possible appreciation of the asset, but the cash flow, the future cash flow. Right now, inflation is helping investors. So I think there's so many benefits on investing in real estate. If you would have to do something different in your business, if you need to make a change, what would that be?
I think I'd like to diversify more. So I know we're only doing residential right now, and we're doing mixed use, which has at least 50% of the total square feet towards residential. I feel there's opportunities outside of these asset classes in the commercial space, typically your industrials, warehouse. So that's something I would not want to do differently, but I'd like to add to our current offerings.
And I think that's a good niche that what I've seen is the multifamily niche is offers probably less competition, and I've noticed that there's not that many options as in the regular residential fix and flip loans. How do you see the future and the new opportunities for your industry, for Instalend?
I think the market is only expanding. The market size is only growing with each passing day. And we've just started out. We were lending out of New York. We were more focused on the East Coast when we started out, and we've gradually built our presence in the Midwest to now actually having a foothold on the West Coast. So while we are a nationwide lender, we truly like to scale the book in a way where we are nationwide across all asset classes. Whether it's single families, multifamilies, mixed use properties, across all different loan programs, whether you're talking about a 12-month short-term fix and flip, or a fix to rent, or a build to rent.
You're doing new development too, right? New development.
Yeah, ground up, and then also your long-term rentals, right, for either cash outs or for acquisitions of turnkey assets.
Yeah, that's great. The new development, because for people that want to start maybe developing 5, 6, 10 homes, they can use you guys, and great partner for new development. Now, how many states you're in now?
We're in all states except for the Dakotas.
Wow. Okay. Wow, that's impressive. You've grown so fast in 4 years. That's amazing. If somebody asks you, Saurabh, how can I start? What would be the advice to start? I mean, look at certain markets. I mean, you're dealing with investors across the board. What markets are you seeing that are the hottest right now for, let's say, long-term rentals, and let's say for fix and flip? What cities, what markets?
Sure. I mean, we've seen a lot of growth corridors, markets where somebody's a new investor and wants to start out with smaller value properties just to get a flavor of how fix and flips work. We've seen a lot of activity in pockets of Ohio, in pockets of Michigan, Chicago, where you can still acquire properties which are between 100 to 200K in purchase price, do moderate rehabs in the size of 50 to 75K, and still hit a good ARV. And these are markets where because there's gentrification, the markets are also expanding. They're also becoming good areas for rental units. So you can also keep your exit options open by not just looking at a sale, but also looking to bring in a tenant and then cashing out and then holding on to it as a rental.
Right. So those are good markets. The Midwest, the great markets, you can really acquire properties there that are, way lower price than in the coast, West Coast, and so on. What was the biggest mistake that you've done so far?
That's a tricky one because I made
or
so many
few
mistakes.
mistakes? I'm a big fan of mistakes because that just force you to learn so much.
Yeah.
And so I'm always for mistakes. I encourage people to do mistakes. That fear sometimes paralyze people, but I think is good to go out and make mistakes so you can learn.
I have made a plentiful of mistakes, and that's honestly the only way to get your business off the ground. If you go and look at any successful entrepreneur or any company which has become a startup to sort of like a mid cap or a large cap company today, the best way to grow is to not repeat your mistakes and make so many mistakes that you finally figure out what works. So we've gone through this journey of making as many mistakes as we've had to. And just to kind of outline one of it, specifically talk about real estate investing. I think when there was a time when we had advanced draws, and when the market changed, we realized that that was a gap where, because we had advanced the draws, we in a way over leveraged our investor, because typically what we do now is we have them finish the work and then we reimburse them for the work which is completed.
Correct.
Which technically means that the equity is already built in because they put the money up front and then we are reimbursing them. But if you do the other way around, and sometimes any event may happen in an investor's life cycle, it's a personal thing, it's a professional thing. Scaled investors are dependent on general contractors. Something may go wrong with the general contractor, and if you've advanced your draws, you're in a sticky situation because you already released the funds. The investor is not holding on to those funds. The GC is probably not responding to the investor or to you, and the project is not finished. So you're stuck with giving money out for a property which has not completed the value. So the value inherently is now not there in the property. And who is liable for it? Is it the GC or the investor? So that's like a bad problem to have,
A
or a
bad problem.
situation to be in.
Yeah. And I've been in that situation. I've been in that situation. I know exactly what it feels like.
So I think that also allows you to look within, introspect, and fine tune your business model. And there may be deals that you may not be able to fund, or investors you may not be able to work with. But at some point, you take a call on what are your best practices for running your own business. And I think that's something we've learned probably the hard way. And we've now maintained a very disciplined release of funds, which is purely reimbursement of work completed.
And I think at the beginning, and there's so many people out there lending, right? That I get so many offers and all that. But that's the important thing, is that you partner up with a lender that is really partnering up with you. And even though at the beginning it says, oh, these guys are so difficult, I have to, send the inspection and do all this for them to reimburse me. But at the end of the day, it's worth it, because it's really seeking out for the project, for the project itself and for the investor. So I always encourage people that wants to get into the fix and flip investment to find a good partner. And not only a lender, it's key to have a title company, it's key to have a good realtor. I definitely encourage to have a project manager on site, especially if you're doing remotely. If you're doing on your own market, then you can be the project manager and oversee the project yourself. But that's, I mean, once again, mistakes are key to learn. But yeah, that's a good one, man. What's your opinion on the current situation on economically, macro speaking, right? I mean, how do you think that's gonna, government regulation, the economy in general, how do you see that affected or having a direct effect on Instalend, on your business?
I think one key regulatory change we have started noticing is somewhere the government is looking at bringing in regulation for wholesale. So there are states which have now mandated licensing for wholesalers, which has not been the case. So that's an important change to watch out for 2022. And we're also, coming out of the pandemic, coming out of close to 0% interest rate, we're also seeing now the economy, do better, consumers coming back to the market, and we are entering a increasing interest rate environment. So we do anticipate 2022 where the rates will go up, and it'll be important to see whether real estate investors can pass on that additional cost in terms of increase in rent, or whether the tenants are going to, swallow that increment, or because that's the most difficult part, right? I mean, at the end of the day, where does the buck stop? Who ends up absorbing that final increment in cost? A lender is going to pass it on to the investor, an investor may try and pass it on to the tenant. So yeah, that's something that we'd like to wait and see how 2022 pans out.
So you do think in 2022 we're going to see an increase in interest rates for sure?
That's the guidance we have,
okay.
And that's what we are factoring into our business plan.
Usually the difference between the interest rate, the regular mortgage 30-year fixed that you can get on a traditional bank to buy your own property, and the rate that you charge investors for, let's say, a long-term rental, usually what's the spread there? I mean, I understand as a private money lender, you're always going to be a little bit higher, and obviously there's all the benefits like the speed of closing. It's really not doc. You really don't have to provide any docs. So there's a lot of benefits. And sometimes the investors get stuck on that 1 or 2 points, right? Yeah. They don't see the big scheme of things. But usually, what do you think is the difference between on the rate?
So, that's a great question. And, it also makes sense to talk about it on this forum, because a lot of investors may want to understand why is the private capital a little more expensive, right? So we always look to bifurcate that as agency financing versus non-agency financing. Your agency financing is your Freddie, Fannie, all of that, right? Which comes directly from the government source. It's a little more patient capital where, they'll take 90 to 120 days to underwrite, complete. Like I said, it's a full doc loan versus, the non-agency side, which is where we come in. And when you look at that space, it's important to understand who are the GPs, what is the color of capital, and what is the source. If you're looking at working with pension funds, insurance companies, if they are working with you, they are working with you because they want to make that arbitrage, that spread, rather than just parking that in, a 30-year fixed income product. So which is why you'll typically see, there's maybe 100 to 150 basis points as the spread between what an agency source of financing would be versus your non-agency.
Great explanation. Perfect. Yeah, it's very clear. Now, are you mainly doing crowdfunding right now? Same thing, you keep it the same way? Well, you have more institutional investors too. How is that? Are you creating different funds? You have one fund? How are you structuring all that?
So we have a pool of institutional investors. That's basically what we are looking to fund our loans with now.
Okay.
Yeah.
Okay. If you need to choose, 3 top skills or attributes that you believe are critical or extremely important for anybody, any of our listeners, or any advice that you would give for them to unlock their full potential and unlock wealth for themselves. They don't have to be, business related or anything. Whatever it is, but what do you think are the top 3 skills that you think you must work on it or create a habit of improving on those to become successful or whatever they do?
I think this is pretty unique to each individual, but just taking from my own experience, if I have to reflect back and just put out 3 skills that I would like to pass forward to anybody, an enterprising guy, an aspiring entrepreneur, or any other individual investor. I think what is key, number one, is one has to be enterprising. A little bit of risk is what will put you, help you punch above your weight, but at the same time having a good sense on mitigation of risk. So that assessment of risk versus reward is very key, and it goes a long way. That's number one from a business perspective. I think number 2, being a leader, but at the same time being a good team member is key, because you can only walk so far, right? If you want to run, you need to have your team with you. So that really.
And I'll add something on the team part. I do believe real estate investing, specifically real estate, is a team sport. You cannot do it by yourself. I mean, we were talking, right? You need a partner as a lender, you need a title company, the realtor, a good CPA, project manager. I mean, and you will not scale the business if you don't build these partnerships and this team, right? So I think that's key, is the ability to create and build a team.
Yeah. And I think the third thing I'd like to say is a little more on the softer side, where we've heard a lot about what is your IQ, how smart are you, how far along can you go, how quickly can you do things. I think there's something that I'd like to touch upon is the EQ, which is the emotional quotient, which I think if that's an awareness or that's an element that you bring, when in your day to day working with the people you're working with, whether it's your team internally, whether it's your team outside, your investors, your capital partners, that's I think that for me is the magic portion on how things really fall together, because you're going to see a lot of success, you're going to see a lot of failures, you're going to see a lot of challenges. And eventually, to come out of all of this, there's only so much you can do single-handedly, and there are only so many times that you'll be able to come and rise to the occasion. For most times, you'll need the right mix of the situation, the people, and the enablers. So if you have the right EQ, I think that really has the ability to absorb all different challenges, all the shocks, and then help you get out of it.
And that goes in line with the mentality, right? I mean, that strong mentality. There's a book that I love, and I always mention it in almost every interview that I'm doing, is obstacle is the way. And basically is that, is how do you keep the serenity on yourself to change the things you cannot change, accept the thing that you cannot change, and then just have the wisdom to accept the difference between those two, right? And that's really what it comes down to, that emotional intelligence. What are the 3 top books that you will recommend? They don't have to be business. I mean, what can be the spiritually, personal development, business, whatever, that have been key for you, that you go back to those, you read them often? Top 3 books that you would like to recommend to the audience.
Yeah, there are definitely a bunch of books that I would recommend. But the 3 key books, if I can think of, that really helped me, put all of this together, I would say number 1 is 0 to 1 by Peter Thiel. He's a serial entrepreneur, a serial investor. And for every enterprising entrepreneur who wants to get started, I think 0 to 1 is a great book, which tells you not just how to incorporate and get started, at ground zero, but also how to scale your business to 100. So his journey and, everything that the book tells you, there's a lot of stuff you can relate to, and, it gives you good wisdom and good, in a way, it's a good guiding light to how you can go through obstacles in your own life, or celebrate the small wins, but not get beaten down by the big losses, things of that nature.
Great.
What I also like is Don't Sweat the Small Stuff, It's All Small Stuff, by Richard. I think that book really helps you draw a balance in your day-to-day, because sometimes you're just so caught up with deal flow and deal work that all you're looking at is your final output, which is, as a lender, you're looking at numbers. So that's what you're focused on. And sometimes things may not work out. You may be working with an investor, you may have given the most competing term sheet, you may have done everything right, and for some reason the deal didn't work. Maybe the appraisal didn't come back, or maybe the seller canceled, something or the other, right? So it's important to still, not sweat it out, because eventually you'll find solutions to everything. So I would say don't sweat the small stuff, because all the small stuff.
Great book. Yep.
Yeah. And I personally also like this book called The Everything Store. It's basically, a journey about Amazon, from when it started to the dot-com crisis, to where it was almost on the brink of extinction, to how it came back. So, it tells you everything about innovation, which today is key. Like, just drawing an example from Amazon, it came back because it launched Prime, it launched a few other products, which at that point could have been ancillary to what its main business was. But today they have sort of become the feeders to the main business. So I think it's very important to aspire to constantly learn, evolve, and innovate, because that's the only way you can stay a step ahead of, your competitors, your peers, or see what is the new direction the market is taking, what is the new change that has to come about, and how you're ready to handle that. So I think innovation is key, and that book shares, reflects well on how you can look about your own circle of innovation.
Awesome. What keeps you motivated every day, man? I mean, what pushes you to wake up every morning and just press forward, right? Because we talk about success and all that. That's great, but we all have bad days. We all wake up some days and we're like, oh man, we gotta do this again, or what? I mean, and we don't want that. We want to wake up every day full of energy and then keep going. But there's some days that is harder than others. What keeps you motivated, pressing forward?
Honestly, I just love what I do, and I love doing
Passion.
it in a space. Yeah, it's my passion. I'm doing it with my brother. I mean, we have a great relationship. He's more of a brother than a business partner, and we have complementary skill sets. So it's never like going into work or waking up and starting your day to do like something on the work front. It's always about, hey, this is just my passion, and I'm doing it with people I love, and it's just fun. Yeah.
So it's just having fun. That's the best. And when it's fun, it doesn't feel like work, for sure. I agree with you. I mean, it's fun. You're enjoying it. And we invited Sohin to be with us as well, but he's out of the country at the moment. So next time we'll definitely have him on the show because he's a very brilliant guy too, and we'll love to talk to him too. But now a lot of our listeners will like to get involved in the real estate investment. I have people that follow me that are friends of mine, always asking me, how to start, what do I do? And as we discussed, it's key to have a good lender partner. So if they would like to get in touch with you or get on a call with you guys to kind of learn more about your loan products, your services, and how you can help them get a start to some, or maybe help them scale some other investors that already have done some investments. And you do also loan to new investors, correct?
Yeah, we do lend to new investors. We also lend to foreign nationals.
Oh, that's great.
So we have a broad spectrum. Our minimum loan amount is 50,000, including your purchase and rehab, and our maximum loan amount is 50 mil. So that really allows us to work within that broad spectrum of small loans across different products, asset classes. So yeah, we'd welcome the opportunity to work with investors, whether they are new investors, seasoned investors, foreign
nationals. Great. And I'm sure the guidelines might change a little bit from one to the other, but you can discuss that with that particular investor that show interest. If they would want to get in touch with you, go to your website, is instalend.com. How can they get in contact with you, Saurabh?
Sure. You can either go to the website and submit an application if you're looking to get some terms on a specific property you're looking to buy. We are also issuing pre-approvals through our website in case you need one to put something under contract. Or you can reach out to me directly. My email is saurabh.shah@instalend.com, which is saurabh.shah@instalend.com.
Awesome. And you guys will see it on the screen as well. His email, his website, and you can get in contact with Saurabh and his team. I personally have done many projects with you, Saurabh. I've kind of lost count already of how many we've done together, but I think it's been a good ride. Definitely with some bumps on the road, because that's how real estate investment is sometimes. But most of them are good. And we continue building our relationship and continue doing business with you guys. And thank you so much for joining us on this episode and sharing your story, sharing your company, what you guys do. I wish you the best success on your new projects, and I really will continue our strong relationship.
Yeah, thank you, David. It's been a pleasure to be here, and I hope we can reach as many people and have been able to make a meaningful impact with our story, what we've seen. And I'd love to stay in touch and answer any questions, any inbound inquiries or clarifications that come in from your investors. So yeah, happy to be here, and thank you for having me here.
Thank you, Saurabh, and let's keep helping people to unlock that wealth, man.
All right, thanks.
All right, thank you, Saurabh.